You just made the last payment on your 20-year term life insurance policy. 20 years of premiums, never late, never missed. You feel a sense of pride. You protected your family. Now the policy expires. You are 55 years old. Your kids are grown. Your mortgage is almost paid. You think you are safe. Then you get a call from your doctor. The routine scan showed something suspicious. It is cancer. You have a good chance of beating it, but treatment will take a year. You will need to take time off work. Your savings are modest, and your life insurance is gone. You cannot buy a new policy because of your diagnosis. You are uninsurable. Your family is one medical bill away from financial disaster. You made the worst mistake of your life. You outlived your term policy and did nothing to prepare. By the end of this video, you will understand exactly what happens when you outlive your term life insurance, why it is a financial disaster for most people, and the 3 simple strategies to avoid it. I will break down the mistake that 90% of term policy owners make, the hidden option in your policy that most people never use, and the affordable solution that turns a term policy into permanent protection. If you have term life insurance, or if you are thinking about buying it, this video could save your family from losing everything. Let me start with the most common assumption about term life insurance. Most people think that when the term ends, they will no longer need life insurance. Their kids will be grown, their mortgage will be paid, their retirement accounts will be full. That is the ideal scenario. But life does not always follow the ideal scenario. You could have a child later in life. You could refinance your mortgage. You could experience a market crash that wipes out your retirement savings. You could develop a chronic illness that requires expensive care. Or you could simply outlive your term policy by a few years and still have dependents. The average age of first-time homebuyers is now 36. A 30-year term policy would expire at age 66. Many people still have a mortgage at 66. Many people are still working at 66. Many people have dependent children later in life. The assumption that you will be done with life insurance at the end of your term is often wrong. Now here is the pattern interrupt that most people do not know. When your term policy expires, you have options. But you have to act before the expiration date. The most important option is called conversion. Most term life policies have a conversion provision. This allows you to convert your term policy into a permanent policy, usually whole life or universal life. Without taking a new medical exam, your health could have deteriorated. You could have developed cancer, heart disease, or diabetes. It does not matter. The insurance company must convert you based on your health at the time you bought the term policy. That is an incredible benefit. But here is the catch. The conversion option expires. Most policies give you 10 to 15 years to convert, or they require you to convert before a certain age, often 65 or 70. If you miss that window, the option is gone forever, and most people forget about it. They let their term policy expire, and they never convert. That is the worst mistake. Let me break down the 3 strategies to avoid the disaster of outliving your term policy. Strategy 1 is to ladder your policies. Instead of buying one 20-year term policy, buy 2 policies. For example, buy a 10-year term policy for $500,000 and a 20-year term policy for $500,000. The 10-year policy is cheaper because it is shorter. The 20-year policy is more expensive, but you only need it for the longer term. As your needs decrease, you let the shorter policy expire. You still have the longer policy in force. This gives you flexibility. If your health declines, you still have the 20-year policy that you can convert. You are not putting all your eggs in one basket. Strategy 2 is to convert early. Do not wait until the last year of your term policy to think about conversion. 5 years before your term expires, call your insurance company and ask for the conversion options. They will tell you what permanent policies are available and what the premiums will be. You can convert a portion of your term policy. You do not have to convert the full death benefit. For example, if you have $1 million term policy, you could convert $250,000 to a permanent policy. The remaining $750,000 of term coverage will continue until the end of the term. This gives you a permanent base of coverage that you cannot lose, no matter what happens to your health. Strategy 3 is to buy a return of premium term policy. These policies are more expensive than standard term, but they refund all your premiums if you outlive the term. You pay, say, $100 per month instead of $50. At the end of 20 years, you get back all $24,000 you paid in premiums. That money can be used for retirement or any other purpose. It is not a huge amount, but it is better than getting nothing. Return of premium policies are a good fit for people who are disciplined and want to guarantee that they get something back. However, the extra premium you pay could also be invested elsewhere. Run the numbers. Now let me give you a real-world example of the worst mistake. A man in Illinois bought a 20-year term policy at age 30. He had a wife and 2 young children. He paid his premiums faithfully. At age 50, his term expired. He was healthy. He had no major health issues. He decided he did not need life insurance anymore because his kids were grown and his mortgage was paid. He let the policy lapse. At age 52, he was diagnosed with early-onset Alzheimer's. He could no longer work. His wife had to quit her job to care for him. Their savings were drained. He tried to buy a new life insurance policy, but no company would insure him because of his diagnosis. He left his wife with nothing. If he had converted even a small portion of his term policy to permanent insurance at age 48, he would have had coverage for life. He would have paid higher premiums, but his wife would have received a death benefit. That is the cost of the worst mistake. Now, let me give you an example of getting it right. A woman in Texas bought a 30-year term policy at age 35. At age 55, 5 years before her term expired, she called her insurance company and asked about conversion. She had developed high blood pressure, but her conversion option allowed her to convert without a new medical exam. She converted $200,000 of her $750,000 policy to a universal life policy. Her premium increased from $60 per month to $180 per month. She kept the remaining $550,000 of term coverage. At age 65, her term policy expired. She still had $200,000 of permanent coverage that would last her entire life. She died at age 78 from a stroke. Her family received $200,000 tax-free. That money paid for funeral expenses and helped her husband live comfortably. She avoided the worst mistake. So what should you do right now if you have a term life policy? Follow these steps. Step 1. Find your policy documents. Look for the conversion provision. Note the expiration date of the conversion option. It may be a specific age or a number of years from the policy start date. Step 2. Call your insurance company and ask for an in-force illustration. Ask them to show you what the premiums would be to convert a portion of your term policy to a permanent policy. Ask for quotes at different death benefit levels. Step 3. Assess your current health. If you are healthy, you might not need to convert. You could buy a new term policy. But if you have any health issues, conversion is your lifeline. Step 4. If you are within 5 years of your term expiration, start planning. Do not wait. Step 5. Consider buying a new term policy now, while you are still healthy, to extend your coverage. You can stack policies, keep the old one and buy a new one. When the old one expires, you still have the new one. Let me also address the UK and Canada. In the UK, term life insurance is similar. Most policies have a conversion option, but it is called convertible term. You typically have until age 60 to convert. The same principles apply. In Canada, term policies also have conversion options. The deadline is often age 70. Check your policy. The strategies of laddering, converting early, and buying return of premium all work in both countries. Let me recap the key takeaways. Number 1. Outliving your term life policy is a disaster if you still have dependents, debt, or health issues. Do not assume you will be safe. Number 2. The conversion option in your term policy is the most valuable feature you have. It allows you to convert to permanent insurance without a new medical exam. Number 3. The conversion option expires. Know your deadline. Most policies give you 10 to 15 years, or until age 65 or 70. Number 4. Convert early. Do not wait until the last year. Your health could decline unexpectedly. Number 5. You do not have to convert the entire policy. Convert a portion to create a permanent base of coverage. Number 6. Ladder your policies by buying multiple term policies of different lengths. This gives you flexibility and reduces the risk of being uninsured. Number 7. Return of premium term policies. Refund your premiums if you outlive the term. They are more expensive, but they guarantee you get something back. Number 8. The worst mistake is letting your term policy expire without converting or replacing it. Do not make that mistake. Here is what I want you to do right now. Pull out your term life insurance policy. Find the conversion provision. Write down the deadline. Set a calendar reminder for 5 years before that deadline. Then call your insurance company and ask for a conversion quote. Just ask. You are not committing to anything. That one phone call could save your family from financial ruin. If this video helped you understand the hidden risk of term life insurance, hit the like button. It helps more people avoid the worst mistake. Subscribe and turn on notifications so you do not miss my next video, which is called The One Page of Your Life Insurance Policy That Could Save Your Family Millions, and comment below. How old were you when you bought your term life policy, and when does it expire? I read every comment. Thanks for watching. Now go check your policy. See you in the next one.